Hi, this is Chris Uppin, and I'd like to give some basic tax tips for the new business owner. The topics that I'm going to cover are what are some of the qualifying business expenses, some basic record keeping, and some information on calculating the home office deduction, as well as information on calculating the business use of vehicle. This information is by no means meant to replace the knowledge and advice of a certified accountant. It's merely meant to give you a basic understanding of the potential deductions so that you can begin to keep track and record of them. In order to qualify for most of these tax savings, the IRS requires you to show an intent to earn a profit with your business. Besides what your business provides, you're in business to make money. So if you work your business, you should have no problem qualifying for these tax benefits. First, what's a business expense? Any money you spend directly related to starting, maintaining, and operating your business qualifies as a business expense. Here are some examples. Everything it costs you to start your business, any ongoing costs required to run your business, any ads you place, any marketing materials like brochures or business cards, office supplies to include paper clips, any education that can be associated to running your business better, meeting and events you attend, travel and lodging for your business. Some business dinners can qualify. Business subscriptions of all types. The home office deduction can save you a percentage for your mortgage and rent, your home utilities, your home improvements. You could save a percentage of all your vehicle-related expenses. You could save on insurance premiums you personally pay. Deduct the cost of clothing you wear for business, and the professional services of an accountant, lawyer, or financial advisor. These are just some of the tax advantages that you have now. I won't get into them now, but there are more. When keeping tax records, the thing to keep in mind is to keep it simple. You're not looking for another profession as an accountant. That's what these people are skilled at. Focus on growing your business and let them handle the number crunching. First, every time you spend money on one of the items I just covered, make a note at the top of the receipt as to the category it falls under. This will make it a little easier for your accountant and may save you some money on his time. Use a box, or even better, a multi-pocketed folder to store and organize all your receipts and expenses. Try to get in the habit of filing these receipts on a regular basis so you don't lose any or get overwhelmed at the end of the year. Decide what works best for you and stick to it. The home office deduction can save you a lot of money on expenses you're already making. But in order to take advantage of this benefit, there's a few things you're going to need to do. If you haven't already, dedicate an area of your home that will be the center of operations for running your business. This is usually where you have a desk, where you pay your bills, a computer, maybe a printer. The important thing is that it's an area of your house removed from the common living spaces where you can, without substantial distraction, run your business. Take a tape measure and find out the width and length of the space to the nearest foot. When you multiply these two numbers together, you'll get the square footage of your office space. Also, make note of the total square footage of your home. You can get this information from the documents you have from when you bought your house, or you can even get online and look up some of the popular appraisal sites. Your accountant will then use these numbers to calculate the business use of your home. That percentage can then be deducted from most of your home-related expenses. File these numbers and information along with a photo of the space with the rest of your tax records for the year. Getting vehicle deductions requires some work on your part. Unless you have a vehicle that you can prove is used only for business, you will have to determine how much use is for business and how much is for personal. To do this, you'll need to keep a travel log for the next 90 days, every day. This information you will need to record would be the date, where you're going, why you're going, and how far it took you to get there. You need to document both personal and business, but be very brief but concise. Here's an example. After doing this for a while, you will become very efficient and learn how to combine both business and personal errands to increase your savings. Once your 90-day log is complete, this information will be used by your accountant at the end of the tax year to calculate your business use average for the entire year. You are not required to calculate this, but for informational purposes and in case you're asked by your accountant which method you want to use, there are two methods in which your accountant can determine your vehicle savings: the standard mileage rate or the actual operating cost. The standard mileage method doesn't require any additional record keeping besides keeping your 90-day travel log, and it's based on the current mileage rate. For example, if the current rate is 55 cents a mile and it's calculated you drove 2,000 miles for your business that year, your vehicle deduction would be $1,100 for the year. Done. The actual operating cost method is a little bit more involved. While you'll need to keep track of more expenses, you can have a substantially higher deduction. This method is sometimes better when gas prices are higher, maybe you drive a gas-guzzling car, or your car is prone to pricey repairs. These are many of the expenses you'll need to keep record of for this method of deduction: gas, oil changes and tune-ups, alignments and balancing, tires, repairs and maintenance, washes, waxes, detailing, auto insurance premiums, road hazard insurance costs, license, registration costs, emissions costs, any lease payments you might be making, and the list goes on. Once again, the percentage of your business use is the percentage that will be deducted from the total of all these expenses. What I've shared with you are the basic guidelines to follow when tracking and preparing for your new business tax deductions. Bottom line, keep it simple. Don't spend too much time on it. Do what you need to do and move on. You need to focus your energies on growing your business and making money. Accountants are there for a reason. That's what you pay them for. But not all accountants are created equal, so make sure yours is familiar with business and home-based business tax deductions. Once your business begins to grow, there are ways you can keep better records that will make your accountant's job easier, which can equal savings when it comes to his services. But don't worry about that now, worry about it later. And always consult with a professional CPA about your taxes and any changes to the tax law. There are many more tax advantages available to you as a business owner that aren't covered here. Things like making changes to your current withholdings to get larger paychecks, hiring your children or spouse as an employee, deduct entertainment and recreational activities, or how you can file for deductions up to 3 years ago on things you forgot to take. Many others. There's also many resources available that cover business taxes. If you'd like to learn more, please let me know and I can direct you to a good resource that I've used. But as I said, focus on your business and let the pros handle the numbers. Good luck in your business. This is Chris Upton, and I wish all the best to you.